Hi friends, today I want to share with you an episode we aired a few months ago with Carmelo Oliveri. Carmelo is a friend of mine, a fellow real estate investor who runs a local real estate syndication as well, and we share stories of mistakes we've made in the past and successes as well. We really focus on the 1031 tax deference, the generational wealth, and the importance of creating and handing down generational wealth. We're both family men, so it's a nice episode. I took a 10-minute clip from it that I thought was really important, and I want to replay that for you now. So take a look at it and enjoy. And again, if you're enjoying our content, please like, subscribe, and leave a comment. We'd love to hear back from you. Thanks a lot. Have a good day. Let's just do a scenario. So this is how people learn best. Let's say you sold a piece of real estate and you made $1 million in profit. Okay. Now, if you 1031, you take that full $1 million in profit, and you're able to move it into a new asset. Let's say you can buy a $3 million asset, okay? 25% down, renovation costs, closing costs. So $1 million gets you a $3 million asset because you're using a mortgage to buy the real estate, right? You're getting a $2 million mortgage, right? Okay. So now let's say you sold and you didn't do a 1031 and you just kind of putzed around and bought something a year later. All right. Well, now you had, instead of $1 million, you have $750,000.
Maybe less.
Right. And what does that buy? Well, 3 times 750 in the same purchase scenario, that gives us $2.25 million in real estate.
Yep.
So in that scenario, we bought $750,000 of additional real estate value, right? A $3 million building instead of a $2.25 million building because we did a 1031 tax deference, right?
Exactly.
Yep. All right, so that's now put another zero on it, right? That can just keep building and building and building. So
exactly.
Yeah, that's the idea. By doing a 1031, you've achieved another $750,000 of real estate purchasing power, and that's a big freaking number. So that's a nice way to explain the power of a 1031 and why the rich use it to get richer. It makes a lot of sense.
And I think if you look at the past few years, a lot of people doing 1031s, and they're probably overpaying for the deals that they were acquiring and I think that's what drove the market up also, because they didn't want to get hit with the taxes. You're selling a $10 million asset, you're making $5-6 million, whatever the case may be, 20-30%, 30% of that is a huge chunk. They wouldn't mind paying, hey, listen, if I don't have to pay $600,000-$700,000 in taxes, I'd rather overpay for this asset. I know it's going to cash flow in either way. I think that was probably a big driving factor in why we are in this market we are now. It's inflationary numbers.
Yeah. So, and now
the Fed to come in, and the Fed says, okay, now we're going to raise rates.
Yeah.
Now you're stuck here. So now what are these sellers going to do? You can't cash out, refinance, because now your value, diminished, because now your rates is much higher than you anticipated them to be, a few years ago. So.
Yeah, exactly. But now you can also 1031 into a syndicate. So we actually are going to be working on possibly setting up an entity that can take a 1031 capital. There's a couple of different ways to do it. There's a Delaware statutory trust. There's tenants in common. Both have their pros and cons. But we're working on structuring something like that for our investors, because I get calls all the time. Hey, I got an asset, my partner on it, we're not getting along. I want to sell it like ASAP or whatever. It's 6 hours away and I'm tired of driving up to Syracuse to manage it, So, people, there's so many stories in real estate. Usually it's too far away, or I'm getting to an age where this is tiresome, or my partner's annoying me. I just want out. I bought it with my my siblings and now we're not getting along. I just want my brother. So there's a lot of different scenarios like that. And I talk to investors all the time and they say, hey, but I want a 1031 into one of your deals, right? I like what you guys do. I know you have a good infrastructure in place, a good track record, but I don't want to sell it, pay a bunch of tax, and then invest the money in People's Capital Group. I just want a 1031 into People's Capital Group. And I have to say, sorry, we don't have that structure in place yet. So we are going to be structuring that, but there are other syndicates out there that accept 1031 capital as well. And that could be a great option for someone looking at 1031 and kind of put their feet up and get passive income also.
Yeah, I think the tenants in common is probably the most used practice from what I've seen in the past. And Delaware it's a statutory trust. I've never dealt with that, so I've just heard about it, but I'm just not too familiar with it. So, but no, tenants in common has been one that we used in the past.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Yeah, absolutely. Yeah, it just gets complicated with who's, you want to have certain people managerial control and other people to be more passive. And then you have the debt complication that comes in place, TIC more, everyone has to sign the debt, where a DST, you could structure it a little bit more so the investor doesn't have to sign the debt, but then you have complications on the management and operations side of it kind of. So, it's definitely more complicated than a regular syndication, and but it's something that it's a product I want to offer to our investors. One thing I've noticed, the space we're in, the syndication space, the more products I can offer my investors that are different, the more I can help people invest in real estate. And it's really incredible. We sent an email out on Tuesday of last week that we are starting to do short-term promissory notes again. And we haven't done this in 5 or 6 years. We've just recognized that, hey, there's a lot of residential deals starting to pop up out of the woodwork. We also want to start going to sheriff sale auctions again and start snagging some sheriff sale deals there. We've done some of our best work there through the years. And we're also just seeing opportunities where we want to move quick and so on. So we need a cash ready to go for those opportunities. So we go to our investor base and say, hey, we'll do short-term promissory notes, 6-month investment term, 8% annualized interest, and we have 5 spots open. Since that email, 4 of the 5 spots have been filled. It's just been incredible. We really don't need to fill the 5th spot, but we'll probably want to bring on a new investor for that. I always like meeting new investors. So, but just that's a good fit. I talk to our investors. I say, what are you looking for right now? And everyone says, I want a short-term investment. Yeah. Are you finding that?
We have some investors that we've dealt with. It's the first time we're doing a syndication. A lot of the properties we own outright, just myself and my 2 partners, for the most part. So we kind of, even with the state of Illinois deal, we closed. I put in $1 million of my own funds into the deal. Easily closed it without any syndicates. I just want to get my feet wet in the whole process. So we put in some investors. But we short-term stuff. I'm really not tackling or going after the short-term investors. I'm pretty much going after the larger investors, $500,000, $200,000 minimum if I can, that I'm speaking to, for the most part. But I haven't tried that with the short-term stuff, to tell you the truth, because I'd rather just have them becoming partners. My goal is to build a group of investors where we can lean on each other, say, okay, listen, I'm putting in $500,000, you guys are putting in $500,000, let's go buy $20 million asset. Let's go buy $10 million asset. Because with the agency debt and all that stuff, it's not 25% down, it's 20% down. If it's a class A, you might even get down to 15% down payment. It makes more sense to do something like that and just build that team. That's my goal, is to build a team of investors, and let's hold this in perpetuity for the rest of our lives, for our kids, and just pass it down. That's the goal, because at the end of the day, like we mentioned before, if you sell it, what are we doing? We're making the government rich.
Exactly.
To me, it doesn't make any sense.
No, absolutely. And that's probably something we'll be doing as well. We'll probably be looking into starting a 506C later this year as well. That'll be for accredited investors only. Generally minimum investment $100,000 for that, and then the next levels will be $250 and $500. So that's going to be for some of our larger accredited investors, which we really appreciate throughout our network. But we also have a lot of sophisticated investors, school teachers, firefighters, police officers, sheriffs. So the whole spectrum there, home builders, the whole thing, and it's really interesting. Helping all different types of people invest in real estate. And I really love working with the full spectrum, and explaining to people what, real estate syndication is, how to build wealth in real estate, whether they're investing $30,000 from sort of self-directed IRA, as a school teacher or something like that, or a multimillionaire putting, 6-7 figures with us. We appreciate it all, and all the same. And I work to service all those different investors all the same as well. So, but we'll probably in the future start having different funds, one for our larger accredited investors and one for our smaller sophisticated investors. But I always want to have a place for those smaller sophisticated investors. It is a little more difficult to service them sometimes, and they are making smaller investors, so you're talking to a lot more people. But there's just a great pride that comes to helping people diversify in real estate that normally couldn't because they are not accredited.
Yeah, exactly. And I think a lot of them want to invest in real estate, don't know how to invest in real estate, and if you start off and you're really not educated on real estate, there's a good chance you're going to lose your shirt. You're going to speak to a lot of newbies, and what happens? They jump in the market. Why they jump in the market? Because everyone's doing it, and that's usually the peak of the market. And then these guys jump in, and you get hosed. So it's always good to have the smaller investors come in, guide them through, or invest alongside us or you. That way, everyone benefits from it. So,
hi friends. If you're still listening to this episode, that means you probably gained value from our podcast. So I ask one thing of you: please share this with people in your network, and please leave a review on the platform that you're listening to our podcast on. Our goal is to reach 1,000 new listeners this year, so please help us achieve that by spreading the word of a Passive Cashflow podcast, sharing our episodes with people that you think would gain value, liking and subscribing on the platform that you listen to on, and also please leave that 5-star review. It's so important that we reach more listeners and spread the word about how to build wealth in real estate. Enjoy your day. Thanks for your help.